Hey, everybody, welcome to today's episode of the What Worked For You show. Today, we're going to talk about the subject of financial advisors. Now, as an entrepreneur, companies got to make money. You need some advice on what to do with that money because otherwise, as we all know, the business will gladly suck it all back in for us, for better and or for worse. So the subject of financial advice is very important. However, our guest today is someone who has had a little bit of a different approach because not all financial advisors have a great name. Sometimes you hear about, well, they have fiduciary duty, but what does that really mean? And sometimes it doesn't work out quite the way you think it's going to work out. He's been a guest. Our guest has been an entrepreneur for 23 years now, so he's been around for a while. He is a cash flow expert. He actually calls himself the anti-financial advisor. What does that mean? We're going to dive in, but he consults entrepreneurs on how to improve their cash flow immediately. He's been featured in numerous publications such as Entrepreneurs on Fire, CNN Money, US News. So I'm looking forward to this conversation with Mr. Chris Miles. How are you doing today? Thanks for being on.
I'm fantastic, Frank. Thanks for having me on.
Wonderful, wonderful. Let's dive in because this is one of those, money, finance, always a little bit of a charged subject, right?
Oh, absolutely. That's why I like it.
You retired initially at 28, and as before the show you were saying, then I messed up and re-retired at 39. And I'm sort of diddling, thinking, okay, so you retired twice before most people have retired in double that time.
That's right.
So
I
we
fail
got to talk
fast, I
about
guess.
that. Yeah, we got to talk about that. Most people are trying, a lot of people are still trying to figure out how to pay off student loans at either of those numbers.
Mhm.
What was the mindset shift that allowed you to achieve that twice?
Well, it was the exact opposite mindset that I had going in, right? Because the first time around, so I actually started out, I was looking to become a business consultant at one point when I was in college, but I figured I should have real life business experience. So I actually dropped out of college. I was going to take a 1 year sabbatical, find some business to start, gain some experience so then I can go back, get my MBA, and have more than just book smarts. Well, I started looking around for what business that would be. And the first one that came up that seemed kind of intriguing was becoming a financial advisor. Because I figured, worst case scenario, I learned about money for myself. And maybe I'll even help my dad, who was the guy that was like the penny pinching saver, the guy that's like, we can't afford this. What do you think I am made of money? Money doesn't grow on trees. I don't know why my dad sounds like a wrestler, a professional wrestler in that when I imitate him, but that's what I guess he sounds like. But anyways, so I figured like worst case, I get a good education for myself and maybe for my dad who thinks he's going to die working, right? So I did that. Never went back to school, never finished my degree. And I was a financial advisor, did that for several years. And 4 years in, my dad reached out and said, well, Chris, when are you going to advise me? So I sat down with my dad, looked at his finances for the first time in my entire life because he never ever shared his experience. And then as I looked at all of his finances, I said, okay, Dad, you did an awesome job here. You're 100% debt free. You've paid off your mortgage even in like 18 years. You've been saving your 401k. But here's the deal, Dad. You're 61 years old. If you want to retire today, you need to die in about 5 or 6 years because that's when you're going to run out of money. All right.
How
That's not what I wanted to
encouraging.
hear from you, Chris. What do I do? I said, I don't know. You did it all right. Like you did it by the book that I've been teaching as a financial advisor for the last 4 years, right? You've been saving everything, spending nothing. You're a cheapskate, big time. He says frugal, we say cheap. He was doing all that kind of stuff and it just wasn't working. And I was like, I guess your option is work until your 70s. Maybe that'll be enough, or you die faster. Obviously not good options. And I walked away very disappointed because I thought I'd be able to help him. And I realized I couldn't do anything for him. Month later, I'm talking to a friend of mine who I hired to be a financial advisor. I hired him to be on my team to work for me. But then he quit just months prior to go do real estate investing. And as we're chatting, he says, well, Chris, how many of your clients are financially free where they don't worry about money? I said, well, they all worry about money. Even the ones that have been retired as doctors and things like that, they still worry about running out of money too soon, outliving their money. Okay, so none. Good job. How about this? How many of you guys as financial advisors are financially free, not off your commissions, but actually doing these same investments? And as I thought about it, I was like, well, there's been guys working here since the 1970s and they're still not retired. So I would say none. There's your problem, Chris. And so I started going down the rabbit hole, looking into like real estate investing. And the thing I had to switch mindset wise, it wasn't about the whole set it and forget it mindset, right? That's what I always taught is that you just spend nothing, save everything, save it forever, and hopefully someday you have something. And you're going to save it in mutual funds because that's what everybody has to save their money into because that's all financial advisors offer. I realized pretty quickly I was just a salesman in a suit. I was licensed to sell you certain things, not licensed to make you more money and make you wealthier. And that's the truth. I mean, even when you see financial advisors that make a lot of money, it's not because they actually have good investments or they're a good investor. It's because they're good salespeople. Period. That's it. And so eventually, as I started going down the rabbit hole of real estate investing and doing passive investments, where I wasn't the one doing all the work, I was putting my money with real estate investors. Well, later that next year, after I quit being a financial advisor, I vowed never to teach about money again. Later that next year, as I'm doing that, I realized something. I said, wait a minute. I'm looking at my finances. I now have enough passive income coming in from my streams of income that I don't have to work full time or even a part time job anymore. Like I could literally quit just on the streams of income coming in right now. 28 years old, almost 29 at the time, shocked. This was in 2006, by the way. And so I was like, this is crazy because it was never about accumulating money. It was about accelerating money. It was about how do I get that money to pay me income, right? That's ultimately what we all want is we want the income come from our money. And so when I realized it was about the passive income, not about just accumulating this huge net worth and living on less than the interest, like I was taught as a financial advisor, that's when my whole world changed and it became easier.
So let's talk about this because this is such a charged subject. There's so much advice on money in the world. Most of it is not good. Like anyone's
Hmm.
been in this world knows it's not good.
Yeah.
In fact, there's plenty of people I've met that have money and they don't even have very good advice because talk to them a few months or years later and all of a sudden where to go, right? And I think that's just something that happens with a lot of business owners, entrepreneurs. You come into this money, but you don't really know how to manage. You think you know because you made it or you provide this great value, and then all of a sudden you feel like you've gone back years, if not decades.
Right.
On the other hand, have people invest in the stock market and they've been trusting their trustee stock or mutual fund person and they're the smartest people in the world till the market crashes, then maybe they're not so smart. But wait, just hang in there, it'll be okay. Oh wait, but you're supposed to retire next year. This could be a little right. There's so many stories, so many problems, and they never seem to go away. Like, and then there's the new financial product, and oh, now there's this type, and right, then it's real estate, and then it's now you're hearing about gold, and it just it never ends.
Hmm.
So my question to you is, and we're going to get to that by the way, but my question to you is, what was working for you at 28 that you had these multiple streams of income that you could just be like, I'm good.
Yeah. Well, I'll tell you, one, I didn't need a lot of money back then. I only needed 3,500 a month to live on, right? Which, it was fascinating because I mean, I had a young family. I was just getting started. But really what it was is this. I had two things going on. One was that I realized it was about income, right? Passive income. So I took my starter home as an example. I took my actual house, sold it to an investor at full retail price, then I leased it back and then rented it out. So I basically subleased it to then. So I was able to strip out all my equity and then go ahead and rent it and turn it into a rental again. So I was creating streams of income from that. But now I had extra cash, plus the cash I'd been started to save and accumulate and things like that. I then realized I could also lend my money. I could lend my money out to real estate investors. Now understand at this time in 2006, there were people that were paying very very rich amounts of interest, more than they should have been, right? That's why 2007, 2008 was so hard for a lot of real estate investors. And so I would lend my money out, for example, because there's guys that would pay you 1, maybe 2% a month on your money. So if you had $100,000, you're getting paid 2% a month. That's $2,000 a month. Now you won't very likely find 2% a month. If you do, it's not likely to last, right? 1% a month though is very possible. Even with the investments I do today, I can get paid 12% a year or 1% a month on my money. So even if that's $100,000, I'm making $1,000 a month doing nothing. They do all the work. I put the money with them. And here's the thing: I'm the bank. So if they all of a sudden don't pay me my payments, just like the bank, I have my I have claim on their title of that property that they were working on. Maybe it was a fix and flip. Maybe they had to renovate the property and everything, right? Well, if they don't pay me back, I take their property from them, including all the equity that's inside that property. So I not only get my money back, but I usually make an extra gain on top of what they would have paid me anyways. And so I found that there's like these very secure ways that it's not high risk creates high returns, as you hear all these financial advisors say. That's a complete bold faced lie. Because think about it, the definition of risk is chance of loss. When did a 90% chance of losing become a 90% chance of winning? It never has, right? It's a 10% chance of winning, right? So how can we minimize our risk, get it as low as we can to make sure we get the best gains possible? And so that's why I realized like, oh, I don't have to take high risks. That's what financial advisors tell you to do so that they don't take any of the risks. By the way, if the financial advisors really believe in high risk equals high returns, they would say, you know what? If you lose money in the stock market, I'll lose money too. Like I'll have to pay you, which never has ever happened. It doesn't happen. If you lose money in the market, they just get paid a little bit less, but they always get paid no matter what. In fact, you ever notice that financial advisor will tell you, hey, you know what? The market's going down. You should put more money in because it's on sale. You should dollar cost average into that. Keep paying more money in. But if it goes up, they don't tell you the dollar cost average. They say, well, just keep paying in because it's going up, you know? So there's never a bad time to buy for a financial advisor, right? They always get paid. That's the number one, that's the main investment. They take no risk while you take all the risks. And so when you understand that it's not about taking high risks, it's about how do I take the best calculated risk possible to get the best returns, it's a totally different game. So that's how I did it, right? It was like rentals, loaning my money out. Oh, and I also had like another stream of income in business that I wasn't even intending, where one of my friends asked me, he's like, hey, Chris, I know you have a mortgage license and you're doing that part time. Do you like doing mortgages? And I said, honestly, I love educating about mortgages, but I absolutely hate doing the paperwork. I hate having like getting that call 24 hours later when I said, hey, it'll be about 3 weeks before we close. They call me the next day. Are we going to close yet? Right? I hated doing that. And he said, well, why don't you find somebody else who will do it for you? And so when I had friends and families, you know, that were looking for refinances, especially in 2006, there was a lot going on. I was like, you know what? Not only will I teach you cool ways to use your equity to be able to not only pay your mortgage payment, but then will pay you extra above and beyond your mortgage payment. So you're essentially almost mortgage free and you could retire faster. But also, here, go to Clark, this guy, go talk to this nerd. He'll help you out. And then I would get cut in on the deal as just referring the business over. And when I realized it was so easy that I was literally spending a half hour or so with people and get paid sometimes $1,000 or so for that time, I was like, well, that's amazing. Is there any other companies that I'm referring business to that maybe have a referral fee? And so I like refer to a wholesale jeweler in Salt Lake City, for example, because they could get their wedding engagement bands for like a third of the cost they would get at a normal jeweler, right? Because it was wholesale. I would get paid $50 or something like that when they bought their rings, you know, and so like I would do just different stuff like that. So that would even bridge the gap. So the next thing I know, I'm making like $4,000 or $5,000 a month when I only needed 3,500 a month to live on. So not only was I making passive income from real estate, but then I found I can make almost like residual income in business by working almost nothing. And so I was literally working maybe a couple hours a week between all these things, but I had more than enough to just retire, just to quit my any other active streams of income I had at that time.
So there's a lot to unpack there.
Mhm.
One thing I want to talk about briefly is you know, you were lending to investors in real estate, and you know that's something that goes on today,
Mhm.
and it'll always be there, right? And that's fine. My question to you is, you were doing this in '06,
Mhm.
but we all know what happened in '08, big market crash. But a lot of people lent in real estate, they were literally wiped out.
Oh yeah.
So how did you navigate that?
Yeah. I mean, I got wiped out too to some level. I didn't go bankrupt, but man, it would have been easier if I did. So two things happened for me in 2007. So 2007, I'm roaring right along, doing great. You know, a year later, but I decided to start a business with a few other guys. And so we started this business. We're going to save people. We're going to teach them how to create passive income. What I should have done is I should have, instead of just trying to be a quote unquote team player, I should have questioned everything along the way because what happened is as I was in that, I had these streams of income happening. One of the owners said, hey, I don't like the fact that you have these multiple streams of income. I want you just to focus only on our company and our mission, right? Because obviously he gets paid from that too. Um, and so I was like, okay, fine, I'll do it. So mistake number one, I cut off my streams of income even before the real estate was suffering.
Mm.
Mistake number two is I was not as liquid with cash anymore because I was using my cash to go and start financing and funding this business. Well, as I was doing that, of course, I trapped all my money in my equity in my house. I had bought a new home by this point. I was renting out my starter home, and I had equity trapped in there. But again, having been a mortgage broker, I figured worst case scenario, just like I've always done, I just do a cash out refinance, get the money out, and then I've got my cash back. Little did I know that, of course, mid 2007, the summer of 2007, I remember even going in to ask for a cash out refinance because I noticed that money was getting a little tighter as we're trying to launch that new business. By the way, we were focusing also on one market, another mistake. We were focusing only on real estate flippers, people that buy and sell, flip real estate, which was coming to a halt by mid 2007 because the banks were now changing the rules. So not only did it affect our business, but it also affected me trying to access my equity of my house because the banks are saying, oh, we just changed some rules last week. If you can just bump up your credit score a few more points, we'll give it to you next month. I go in the next month, August. We're like, oh, sorry, we just changed the rules again. Come, do X, Y, and Z. I don't remember all the hoops they wanted me to jump through, but like do this and then come back next month in September. September rolls around. Like I did everything you asked me to do. It's been 2 months now. Let's get this done. They said, we're sorry. We don't do any more cash out refinances for business owners. And that was the beginning of the end as we went to that global financial crisis, right? The banks were locking everything up because they were already under stress. They just didn't want to tell anybody until it was too late, right? And so, not to mention, when I had that house, all that equity, I was like, well, maybe I can, if I can't get the equity out, maybe I should sell. So I finally got to the point of desperation where I said, maybe I should sell it. But by that point, the values were already coming down. My equity disappeared. I had to then short sell a property, which means you sell it for less than you owe. But unfortunately, the bank that I had my mortgage through refused the offers. I actually had somebody offer to buy my house. They said no. So about a year or so later after that, finally I had to foreclose on it for about 170,000 less than that offer was just a year prior. By the way, the reason that mortgage company didn't say yes is because they were doing fraudulent mortgage practices. You might have heard of them called Lehman Brothers. So that's
Huh,
who my mortgage was
there you
through.
go.
I did eventually get a $300 settlement check from them a couple years later, but eventually I foreclosed on that house after being in it for 3 years in 2009. And so all this was happening, right? The business was having cash flow issues because our market wasn't working well. I cut off streams of income to be a team player, so I didn't have those multiple streams of income to save me. I had only my business to save me at that point, and it wasn't saving me. And so and all my cash was locked up. I learned a lot, needless to say, which is why the second time I did it, when I did eventually dig out of that hole from about 2009 onward till 2016, it was December 2016 to be exact, when I finally had enough passive income to retire again. I was like, okay, one, I got to be liquid with cash, which every business owner should be, meaning you got to have more than just like 6 months reserves. You should have at least 12 months reserves, if not more, depending on your type of business. And that's not just, I'm not just talking about business, I'm talking about personal reserves, right? I wish that I also, didn't try to pay off my house because I figured I'll just cash it out if I need it. So just pay down the mortgage. Bad mistake. Paying off your debt aggressively can be very costly because again, your cash is locked away. I teach that a lot. Don't lock your money away in prison, which is what every financial advisor teaches. Paying off your house is locking your money in prison. You can only get it if you have to sell it, and it's usually a fire sale, so you don't get what it's worth anyways. Or you try to do a refinance, but again, when you need the money, they never want to give you the money, right? So don't lock your money in prison. Don't lock it in IRAs and 401ks where it gets locked up and you can't access it without getting slapped with 10% penalties and taxes and everything else. Like get your money liquid in that case. So every business owner, I always tell them, like, listen, get lean, get liquid, get out. That's my advice. Get lean means be a wise steward of your money. Watch what you're spending. I wasn't doing that, by the way, in 2007 because so much money was coming in. Why do I need to count my money, right? But when the money ran dry, it's like when somebody takes air away from you, you start counting every breath. When money's taken away, you count every dollar, right? Don't
Yeah.
wait for you to run out of money to start counting dollars. Count them now. Be wise with your money. It doesn't mean you just live on rice and beans. Don't do that crap. Or cut out that latte like David Bach says in his books, right? It's like, no, just simply be a wise steward of your money. Prioritize where your money gets spent and don't spend money where it doesn't do you any service anyways, And then get liquid means have cash available, have it available to use whenever you need to use it, and then get it out when you have that cash available, and then get it out into things that actually produce passive income for you.
So, what are the principles you're working with today that you're sharing with, and I know you're sharing them here, so it's a great segue. But are these the types of things like, or maybe I should ask it this way, like you call yourself the anti-financial advisor.
Mm-hmm.
So if you could just kind of walk us through typical financial advisor versus you, and I know, like we all know, they pitch mutual funds and insurance securities and so forth. We get all that, but
Yeah.
just a little more deeply, like what is the philosophy differences that contrast? Because I could go call 10 financial advisors today, and I'm going to get 10 very different answers
Mm-hmm.
because they're specialized or this or they work for this company or that. So just a little bit more on, regardless of what they do, what's my securities license allow me, what are the funds, what is the insurance, what is the mutual, yada, whatever.
Yeah.
What are those core differences beyond all those details that separates you from what the typical is out there?
Yeah. I mean, if you didn't quite get it from the story, yeah, let's summarize it a little bit because the truth is, and even if you ask 10 different financial advisors, you really don't get that much different advice. It's all based on the same basic core philosophy, right? Which is you set it and forget it, right? You put it away, you lock it away, you save as much as you can for as long as you can. You let compound interest be the eighth wonder of the world, as they misquote Albert Einstein as saying. He never said it, by the way,
So,
but they claim he did.
so let me pause you right there because I just
Mhm.
want to break this down for our listeners. Set it and forget it. Is it even real? Like, if you're really going to grow wealth, is it real? I would say no. What do you say?
Yeah, it feels like to you from a day-to-day basis a negative 100% return because you throw your money into something that you have to lock the prison doors on. Usually they'll say a retirement account, right? And really, if you dumb down everything the financial advisors teach, it's usually centered around insurances and mutual funds, just like you said, stocks, bonds, or whatever. Like they might throw out different terms, but ultimately it always comes down to insurances and securities, which are stocks, bonds, mutual funds. That's it. That's really all they offer. Annuities is literally just through an insurance company, but it may or may not include mutual funds or sub accounts, as they'll call it, right? Or whatever it might be. It's all the same stuff because they are literally licensed to sell you those things. They have a life insurance license, they sell you life insurance. They have a securities license, they can sell you mutual funds. They have different series, 6, 63, 7s, or whatever it might be. They might be able to sell you stocks or whatnot. But ultimately, they're always doing the same thing, which is hey, take all the money you can, save everything, and let it compound forever inside some of these mutual funds or these insurance type products or whatever it might be. And they're going to say, lock it in there for decades. Nothing about today. It's never present planning. It's always future planning, right? In
Right.
fact, I literally just saw in a business group, somebody asked, hey, who should I talk to about future planning? And it was so hard for me not to want to comment and say, well, do you want present planning or future planning? Because future planning is just a crappy financial advisor. They're going to tell you what's going to happen in 40 years. And by the way, they'll plug in a bunch of calculators that you may or may not get a return on because they'll say things like 10 or 12%, which the stock market has not averaged for the last decades, right? 30, 40 years has not averaged that much. It's been closer to like 8.5% is the average. And we're at an all-time market high right now when I say that. It's very different, right? So they throw all these numbers, they throw into calculators and say, hey, look, you should have millions someday. But they never address right now. And the truth is, most of the time, they're way off on their numbers. You end up, it's overpromise, underdeliver because the market doesn't return as high as they claim it does. It's always less. And so people will walk away, even if they were planning to say, oh, if I keep saving what I'm doing, I should have $5 million. Then they find out later on they have $1 million. But in 40 years, what's $1 million gonna be worth anyways after inflation, right? That's the thing that people just don't understand. Where I say, screw 40 years from now, you may not be alive. But what if we can affect today? What if we can plan right now to start generating income and wealth right now? Not waiting 40 years, but today. Because here's the promise. If you can create wealth right now, you'll have a lot more wealth down the road too. but it doesn't require you have to lock your money away into some cruddy, government plan where they can change the rules on you at any time, by the way. You don't have to do that. You can actually have your money working harder for you by creating passive income now, potentially saving your life. So, give you a real life example, because you're probably going to ask that next, right? As I had a guy that came to me, he was 60 years old. He had saved for decades into his government plan. He was a military officer, right? A military colonel, actually. And so he came to me, he said, "Okay, Chris, I just went to my financial advisor. He said, with my $1 million, I can now live on 30,000 a year." That's the other thing too that people don't realize is, when they tell you once you hit retirement, you can live on 3%. People used to teach the 4% rule. That was never a rule. And those are numbers that were up through the 1970s. Don't apply it today. It's a 3% rule. Well, if you have $1 million living on 30,000 a year, you're living below the poverty line as a millionaire. You're a broke millionaire, impoverished millionaire. So he's like, well, could I do something better? Can I get my money working harder? And I said, well, yeah, that's easy. And so he did different things. He split it between things like some duplexes. He also did some things with oil and gas. There's oil and gas investment, things like that. He even did some things like apartment, partnerships where you pool your money with other investors to do it together. And when all was said and done, his million was no longer paying him 30,000 a year. Now it was paying him about 130,000 a year, right? And that's the difference. Is that it's always about how do you create that income right now.
So there's a lot of people that are listening to this, right? And they'll have that $1 million. But like, and I do real estate, right? So I know a lot of people come into real estate, they don't have $1 million.
Right?
They don't even have $100,000. They might have $10,000, 5,000. What is that person that has a small amount? Because it's when you have a lot, you have a lot more options available, right?
That's
At least
right.
that's the stereotypical thinking. But when there's a lot of people out there, they're interested in investing, whether it's in real estate or whatever, but what are their options to start creating income now when you're dealing with small amounts of money? And also keep in mind, I've learned that when someone has $5,000 saved, well, if I'm investing in real estate all the time, that seems small, and it is. But to that person,
It feels like a
it's
lot.
it's a huge deal. There's a whole psychological thing that goes into that. What does
Yeah.
that person do that has a small amount of capital and they're ready to start creating income passively now?
Crazy thing is, if you do have $5,000, you're in about the top 25 percentile of Americans, right? Which is crazy, but it's true, and that number is actually shrinking again after post COVID and everything. But if somebody's starting out with something small, here's what you have to remember: anyone who's promised you that you can create passive income with a small amount of money is lying to you. Absolute lie. And I know because I know a lot of those people that claim it. They're personally friends of mine too. But it's like half truths, right? Like for example, like you mentioned real estate. In the real estate space, there'll be people out there saying, "Hey, you can do this wholesaling strategy where you don't have to have capital. You just have to really apply a lot of time and energy," which is true. And so they tell you it's passive, but it's not passive at all. It's like a new business, right? And that's what the problem out there. There's a lot of people out there talking about passive income, and then they're talking about creating an Amazon store or something like that, or some online business that's anything but passive. So understand this: you either exchange time and energy and or money. If you want true passive income, you need to have a lot of cash, and I would recommend having at least minimum 100 to $200,000 before you even worry about trying to create passive, truly passive streams of income with that money. Now, if you're the person that has 5,000 bucks, the first question you have to ask is that enough to cover at least 6 months of expenses for you? If not, don't worry about passive investments. Like, protect that money. I don't care if it's in a crappy savings account at your bank paying you point nothing percent. That's better than trying to gamble it away. I've seen way too many people, especially lately, where they're like, "Oh, I'm going to just go buy some Bitcoin or Ethereum or something like that," right? Like, or try to buy stocks and they'll try to play the stock game. Bad idea. Bad idea. I used to train people how to trade stocks and options back in the day. 200 people, one on one. I can tell you from personal experience, the only ones that made money weren't, even if they were given the perfect strategy, the only ones that were disciplined enough to make the right amount of money were the ones that didn't even care about the money. The ones that cared most about the money were the ones that always lost it, right? So be careful of that. And there will be plenty of people trying to pitch you on products and services or other kind of investments and whatnot, trying to prey on your desperation. I get people all the time that's like, I got $10,000. What can I do? I'm like, well, do the math. Even if you make, say, 10% a year, which is kind of like the bare minimum of some of our passive investments, 10% a year is only $1,000 a year. You go from 10,000 to 11,000 bucks, it does nothing. Your focus should be first and foremost on one, preserving the money you have, make sure you have a good emergency fund before you worry about investing. Two, also focus on generating more income and being profitable, whether it's in business or even if you have a W 2 job, make sure you have more money coming in that you can then pack away and save. Do that first. Get in the habit, the discipline of saving even more. Don't even worry about trying to chase different returns because one thing is say it took you forever to get to that 5,000 bucks, you go and you piss it away and you lose it. How long is it going to take you to make that 5,000 bucks again? Right? Like how much effort and time does that take? So don't fall into that trap. Save it. I call it put it into your freedom fund, where it could be a high yield savings account. It could be like infinite banking. That's another thing we teach about as well. Whatever it might be, somewhere where you can get a better yield than just in a typical bank savings account.
So effectively, now a lot of people, and I agree with you, like take before you get into passive investing, what you're saying is make sure you got a 1 year nest egg first. Start there. And I think that's great advice. But the challenge there is going to be what about that person who's got a family of four, five, six, whatever? They're making modest money, 50, 60 grand a year at their job, and they got a full-time family. Is it
Yeah,
basically I mean, it's going to take them 2 decades before they could even dream of putting 12 months away, oftentimes, because it's taking every bit of it to support the family.
oh, sure.
Should those people be thinking side hustle? Is that really
Absolutely.
their only option at that point?
Is it the only option? No, but I think it's a great option. And it may not even be a side hustle. I'll give you an example. One thing I've taught a lot of our clients is that the real principle behind making more money is that dollars follow value. Dollars follow the value you create for other people. Stop asking, how do I make more money? People have asked that for generations and it's
They'll
remained
continue,
broke,
and they'll
right?
always be asked, right?
Yeah, money is just the effect, but it's not the cause. Value creation is the cause, money is the effect. And so instead, focus on how do I go about serving people, solving problems, or creating value in such a way that money is just a natural byproduct. You can do that within your own job. I had one guy that did that. He was making 15 bucks an hour at his job. And by the way, I get having a big family. I have 8 children, myself, a blended family of 8. And by the way, when I was going broke, when we lost our house, we had just had our fourth child as we're moving out, trying to desperately find a place because he was just born the week before, the week after we foreclosed on that house. I had to pay the new owner 2,000 bucks to let me stay for 2 more weeks so we can have a baby and quickly find a place to rent. Right. And I was broke, so I was broker than broke. I was over $1 million in debt, kind of broke. So I was $1 million broker than the guy on the street that's begging you for money. So, anyways, I get it, but the thing is that again, like this guy was making 15 bucks an hour, and I just told him, I was like, why don't you go to your boss and ask him, what can I do that will merit me a raise, like would earn me a raise? What can I do for you guys? How can I serve you? And so his boss says, all right, if you do these things, I'll give you a raise. So he did. A few months later, he goes back. It's like, I did it. He's like, dang it, you're right. All right, well, I'm gonna give you a raise because I promised you I would. And he's like, great. And then, but the thing is, he didn't stop there. I mean, it was like a $3 an hour raise. He got up to 18 bucks an hour. He just kept going. And then eventually his boss, a promotion came up and his boss gave it to him because he was constantly trying to be a value creator. He's, as the movie The Forge says, he was a fountain, not a drain, right? And so he actually went and got this raise. We got up to 20 bucks an hour. So now he went from 15 to 20 bucks an hour in about a year. He stayed in that position for 10 months before he had his annual review. And they said, hey, listen, we're thinking about giving you a raise. It'll be like 2 bucks an hour. He's like, nope, I don't accept it. He's like, I did this and this and this. I worked extra hours. I did this and this and this and this and this. They're like, fine, yes, we can't lose you. What do you want? He's like, I want 25 bucks an hour. They're like, we give it to you because you're a huge asset. You've become invaluable at this point. Well, after all was said and done, he eventually got up to 28 bucks an hour. He'd almost doubled his income in a year and a half, all because he was just focusing on how to create value. Another client that did the same thing. He was working for a large bank. Everybody's heard of it. And there was over 100 people applying for 2 positions. It was going to give him a 4,000 a month raise. And I said, well, what do you have to do to get it? I don't know. Ask them. He did. And he says, well, they told me to sell X, Y, and Z more, and then they'll consider it. So he did. I say, for 3 weeks, I don't care if you stay an extra hour a day, do it. He did it. Eventually got him the promotion. He got the raise, and they called him in. They said, you know why we gave it to you? They're like, it's not because you're the number one salesperson here, because we gave it to the other position to that guy. Because you were the only one out of over 100 candidates that actually asked us what you could do to earn it. And that impressed us so much, we made sure that as long as you didn't suck, we would give you the position. So he wasn't even the second best. It was just because he asked. He was a value creator, right? Have that focus. Go in with that. You may or may not have to get a side hustle. And even if you do get a side hustle, go in with that same attitude of how do I go about serving people, solving problems in a way that people want to pay me money. You'll find out making money is formulaic. It's not guess. It's not luck. It's not exploitation. You don't have to screw people over. You don't have to step on people up the corporate ladder. You just have to simply focus on how do I serve people and provide value in such a way that I become invaluable.
The interesting thing is it doesn't matter what profession you're in, there's always a way to add value.
Always.
And I'm in real estate. When you're the actual investor taking on the risk, sure, there's a way to add value. But then are realtors adding value? Right, or appraisers adding value, or inspectors and lenders. Lenders always think, well, I have the money, I'm providing value. I would strongly argue that, because not all money is good money to borrow.
Yeah.
As a lender, even if you have the money, that doesn't mean just because you can lend money, you're offering value. I've seen this happen more than a few times. And we have to understand, and I agree with you, value and money, two completely different things. And I love the way you said it. Money is just a byproduct of value. And if you created money in one space, that doesn't mean you understand what it takes to create value in a different space. And so these distinctions are incredibly powerful. So I love that you phrased it the way you did. I'm like, that's good, because it's so true. And you see a lot of people get involved in different side hustles in real estate, and they try it, and I mean, real estate's risky at the end of the day. There is risk. You could do everything right and still get messed up because of things that you had no control over, like the market, right? Like interest rates going up and messing a lot of people up like they have.
Yeah.
So
many people, I'll tell you, to add what you said there, I mean, people have asked me all the time, like, well, how'd you dig out of that hole? Well, that was the first thing I did. After I got lean with my expenses, it was just purely, okay, I can't cut back anymore without living in a cardboard box with my family of 6 at that time. I need to do something, so I got to create more value. And that's always the question I was asking is, what can I do to create more value? How can I create a win-win for people? What can I do for them? How can I serve them, solve problems that to problems that they're asking about? Maybe I've got a unique solution that somebody else doesn't have, right? That was a big focus. Now, I will say this too, to add, because you did say, like, is it just a side hustle or whatever? Could somebody with $5,000-10,000 do something beyond their emergency fund, of course? Sure. I mean, you could. I mean, there have been more people becoming multimillionaires by simply buying real estate, not even being good at it, right? Buying a property, holding it for a while, and then they become millionaires with very little cash out of pocket. You could buy a house with a 3.5% FHA loan, right? You could get a down payment. Now, you could do one of a few things. It could just be the house you live in, and you might get some appreciation over time. Never ever bank on appreciation. That's not my point here. But over time, it does appreciate, and it's much more stable than the stock market. Even though stocks could beat it, but they won't, because here's why stocks will never beat real estate, especially if you get that 3.5% FHA loan. Because the truth is this, is that when you get that 3.5% down, you're doing something you cannot do with stocks. You cannot borrow money and put into stocks. Yeah, there's, of course, people say, well, you can get that, you can get your margin account or whatever. Yeah, but even that margin account is very, very limited, and they can cut it off at any point, say, nope, you get no more money, right, to leverage. But think about it. If you buy a property, say it's a $1 million property, I'm doing easy numbers, right? You put 3.5% or $35,000 down. And let's just say that in 10 years, 10 years, let's just say that it's now worth 1.25 million, right? Heck, I'll even make it even easier on myself. 1.35 million, right? Goes up 35% in 10 years. Not a lot. That's less than the average is over time, but let's just say it goes up 35% in 10 years. 1.35 million is now worth. You might just say, oh, I only made 35%. The stock's doubled over that period of time, which is possible, right? But here's the thing is that you only put $35,000 down on that property. That 35,000 to make now 350,000. That doesn't include the fact that your mortgage is paying down, which you did yourself, so we won't count that in there. Your 35,000 just made $350,000 doing nothing. What's that? Dectupled your money. You 10x'd your money in 10 years. You can't do that in the stock market. I'm sorry. You really can't. And I know I've done all kinds of fun strategies. It's just not consistent. Even the best traders that I know over time maybe make 25% a year. I mean, and they're like amazing traders if they do that. So I just tell people all the time, like, real estate is one of those things that with very little money down, you can create a lot of leverage and good. But to your point, Frank, I mean, you got to be careful. There's still risk there. Things can still happen. But even if it's just some house you live in, it can still prove to be very beneficial over time. Heck, and even if you don't do that, if you want to create some income off of it, maybe you house hack, as they call it, right? Where you live in it, maybe you rent out a room or two, or maybe you just end up just, buying it, you renovate it, maybe you put your own sweat equity into it and you go and you turn it into a rental and then you make money off that, move into the next house with another 3.5% FHA loan or something like that. I mean, there's just so many ways you can do it with little money to possibly get ahead. It's just going to take some time.
Sure. No, for sure. So back when you got into the financial world, I saw you were a marketing director. You sold financial products, which we discussed,
Mhm.
stock coaching, those sorts of things. What was that moment when you realized the system's broken?
For it started to open up one with my dad. That conversation with my dad started to put chinks in my armor. I'll share another experience too. I had one where I met with my brother-in-law. He came from a wealthy family. My whole goal as a financial advisor was if I could sit down with him and get him sold, maybe I can get to the rest of the family, and then I'm set for life as a financial advisor, right? Because I have all these assets under management. However, I remember sitting down with sitting down with my brother-in-law, teaching him all the stuff about Rule 72 and compounding interest and how this is so awesome and the stock market is so amazing. Check it out. You make 12% a year, right? Because I have the proof on this chart since 2000 BC, it's made 12% a year. And I remember he finally stopped me. He says, Chris, let's just pretend that I give you $10,000 to play with today. You're saying you might be able to make me 12% a year, right? I'm like, well, there's no guarantees. Past performance not indicative of future results. You always have disclaimers as an advisor. I was
Sure.
like, well, there's no guarantees, but yeah, I mean, you could. He's like, okay, Chris, well, $10,000 making 12% in a year is $1,200 a year. But Chris, I can take $10,000, and him and his family still had a few of their dealerships left. They sold off a whole bunch of their dealerships to the guy that eventually bought the Utah Jazz basketball team. And so they had a few of their family dealerships still left. And he says, Chris, I could put 10%, I could put $10,000 down on a big rig, on a semi truck, turn around and flip it a few months later and make a $20,000 profit. So $20,000 profit in a couple months versus maybe $1,200 in a year with you. Why should I invest with you? And I went right into my little database of financial advisors, dogma. And I said, well, you should be diversified. You should put all your eggs in one basket. Besides, business is risky. Ironic that I was in business myself, and that was the only investment that was paying me the most money was being a financial advisor, right? But that's what I told him. And he said, interesting. Okay, well, have a good day. We'll see you. Never invest with me is the best thing ever. And just little things like that between that experience and my dad, and then having that conversation with my friend just a month after I sat down with my dad, realizing that nobody's financially free. Financial advisors aren't financially free, and they're supposed to have it all figured out. So why aren't they? We're just like blind leading the blind, and it's not working for anybody. And so that's why now I did debate it for a few months, but it was finally a few months later. I went to a real estate event, and they start ripping into financial advisors. They even at one point they took a break. They're like, "Are there any financial advisors in the room by chance?" And my friend who I initially talked to turned to me and I was like, I'm not raising my hand because I realized I was about the only hand to go up and I quickly put it down because nobody else had their hands going up. And I was like, I realized that when they're talking about, the rule of 70, talking about like the rule of 72 and how that's BS, or even like, compounding interest, right? Or, high risk creates high returns. They were talking about things like you're in it for the long haul. They're like, well, but when the market goes down, how long does the long haul become? Which, by the way, for my dad, to give you a finish on his story, he worked until about 2015. So he worked another 10 years into his early 70s, just like I said, because not only was he recovering after Y2K, but then bam, the global financial crisis attacked his 401k once again. He had to wait till about 2015 before he finally had just about as much money as what he had in the year 2000 after you factor in those fees and stuff. I mean, it took everybody 15 years to get their money back, right? And so it was that kind of stuff. They were talking about that. They're like, yeah, who would teach that crap? And I realized, wait a minute, I'm teaching that crap. I got to get out of this. And so I quit. That was a Friday night. I saw that presentation. I went on Monday morning and I put in my resignation at that financial firm. I just said, I will never teach about money again. I will be a mortgage broker. I did that. I kept my license as a mortgage broker. I still kept my insurance license too, but I didn't know what to do with it for a while. And of course, I just said, all right, I'm just going to do that. I'll teach ballroom dancing on the side at a local university because I used to be one of the nation's top amateur dancers, and that's what I was doing for the time being until I was starting to learn about real estate investing and whatnot. But that was the
So,
big epiphany was all those myths that were being taught. I was like, I've taught these for years. It hasn't worked. What makes me think it's going to work again? It's like that definition of insanity quote that maybe Einstein said or didn't say, right? It's doing the same thing over and over, expecting a different result. Well, people have been doing the same thing for decades and they're not getting the results.
and they're going to keep doing it for decades, and we all
Yeah.
know that.
As
So
long as
that, and
people
that's
keep
what,
selling on that crap.
and that's why this message is so important.
Mhm.
So now you've been helping people for years achieve real financial freedom through
Yeah.
creating actual income passively that doesn't require work, regardless of where the source is. What's a client story that still gets you emotional that something that you'll never forget where it really made a difference?
I've got several. I'll share this one. This one made an impact for me because it was early on, right when I was starting to really understand cash flow and passive income. I think I was coaching them around 2010. So even my previous company, I was working with these guys. But there were a couple from South Dakota. He was a chiropractor, but he was working like 5+ days a week, right? Just working his tail off. And he didn't really have much of a weekend. He was already kind of exhausted on the weekend, loved his family, loved him to death, but he was just exhausted. He was just running himself into the ground. And finally, like we went through and we analyzed stuff, and we didn't do anything with passive income at this point. It was purely just how do we improve his cash flow between like tax savings and ways to consolidate and pay off debts, creative ways. And a lot of it was getting his money out of prison. Some of it was like old IRA money. It's like we can use that money. Just even if you pay a penalty, pay off these debts, you'll create way more cash flow than you ever will with this IRA in a retirement account. So we just did different things, like created strategies that way. And the next thing you know, we freed up about $6,000 a month for him. That first month, he bought a four-wheeler. Now, if this were like a Dave Ramsey kind of thing, he would be, screaming at him, calling him stupid and all that kind of stuff, right? But the truth is, like his wife even said, she's like, Chris, I know that the four-wheeler is not maybe what you thought we would get, but here's what happened. That $6,000 a month gave him the permission to stop working on the weekends, to actually even start taking time off on the Fridays. So now he has more enough energy for us. And what is he doing every weekend with his family now? He's riding his four-wheeler with his kids. She's like, you have to understand, I got my husband back, and my kids got their father back. And that's when I realized like this is something that's much bigger. That's actually why I call my company Money Ripples, right? It's because it's that ripple effect it creates. Because it wasn't just blessing him and his wife, it was creating a new legacy for his children to learn from, a new way of thinking about money and dealing with money. And not to mention, when you're not worried about your own needs, you start to look outside of yourself. You start to look at your community and the country and ultimately across the world, that ripple effect you can create and bless more lives because you're not worrying about surviving. You're now thriving. You're now worrying about how do I serve more people? And that's really what we try to do. And 64 years old, very young, still very young considering, but he had been retired for 4 years, right? We had got him financially free. He was retired for 4 years. He did different projects he wanted to do, fire service or whatever, and then just randomly at his desk on a Monday night had a heart attack and he was gone. And he was a guy I actually had on my podcast twice. I had him come on in the beginning before he got started. Then I had him come on a year later after he created all that passive income. And so for me, like, and just the friendship we created over those years, to see him pass away was very bittersweet, right? Because obviously, like, I missed him. Like, it was the only podcast I've ever done where I bawled, was talking about his story. But what gave me peace was the fact that he had those 4 years back. Because if he had listened to his financial advisor, he probably would have found a way to just go back to work and keep saving, because that 30,000 a year wasn't enough to live, especially in the state of California. You're basically homeless at 30,000 a year in California.
Yeah.
But for him, I mean, that just changed his whole life. It gave him time with his wife and his kids. He actually would bring his kids to, like, different investing events and stuff. So he's teaching them, again, creating that ripple effect that would go for generations. Didn't have much time, but I'm glad whatever short number of years we had him for, we got him for. And I think that's what most people forget, is that you forget that your time on this earth is limited, and we have no clue how long that is. It could be today, tomorrow, it could be 80 years from now. We don't know. But we do know this, is that every moment counts. And the fact that you have to, if you keep buying the same old philosophy of just save from that future and just put in a calculator, listen, your life is never meant to be put into a calculator. A calculator doesn't do jack squat for you. It's about, how do I actually use this in a way to bless more lives? And how can I have that freedom today versus waiting decades from now, when it may not ever happen if you do the traditional path?
No, for sure, for sure. And just so you know, it froze there for just a moment, so we might have lost a couple seconds, but we'll figure it
I
out when
kind
I
of
go
went back
back
and
to
repeated
editing.
because I noticed it froze a little bit. So
Okay, okay, you got it. All right, got it. So let's, as we're getting near the end, I want to ask this question for our audiences. Most of our audience is entrepreneurs. It's very easy for an entrepreneur to feel stuck.
mhm.
Okay, you're working hard, you put in all this effort, especially in the early part of business, but sometimes you may have been in it for a while and you still feel stuck.
So
They're
true.
grinding, but they're not growing.
Mhm.
And after a while, that takes its toll on you, wears people down. How can entrepreneurs find money, so to speak, in their current situation without feeling like, oh my gosh, I gotta add another hustle. Oh, I gotta add another 40 hours. Like, what should that first couple of steps be?
I really think, like what we talked about before about dollars follow value, go there, start there. And I'll even add a bonus to that. I'll tell you, because as a financial advisor, I struggled so much to make money. Not because I didn't understand what I was doing, but I never understood how important it was to foster an abundance mindset. I was, not only was I raised in a scarcity mindset by a dad who was obviously in scarcity, you can never save enough or pay off debt fast enough, right?
Yeah,
But
yeah.
on top of that, financial advisors work in a world of scarcity, right? It's always like there's not enough. You got to save more. You just need more time, or do this, more of that, more leads, whatever, right? All that kind of stuff. Like, that scarcity drives money away. You will work 5 to 10 times harder making the same dollar. And you know this to be true because if you've ever been in a situation, right, where you're feeling the pinch, like you're like, I cannot pay my bills if I don't make some money, you know what that scarcity feels like. Think about how hard it is to get to that next customer or that next client. You work dang hard. But think about this too. When you say you get that client or customer or two that comes in, the money starts coming in. Have you ever noticed that all of a sudden it's easier? Like, it almost seems like everybody decides to pay at the same time, and then maybe nobody
Mhm.
pays at the same time, right? It's like feast or famine. That right there is perfect evidence, because when you start to relax, when you get in a place of abundance, that's when you start to attract more people. That's one of the benefits I tell people about having more passive income, is because if you have multiple streams of passive income coming in, or even just having an emergency reserve, be just fine. When you come from that abundance perspective, it's so much easier for those people to say yes to you. I even had a client where he did that too, where he was grinding day after day. He actually was very, but year to year, it was getting worse. And he was starting to hate his business. Once we freed up like another, and we freed up different ways. Like, we actually paid off some loans, paid off some debts and things like that. But by doing that, what ended up happening is we freed up like 4,200 a month. Well, once he relaxed a little bit, his conversion ratio of his new patients went up because he was starting to have fun in his business again. So because he was in a more abundant place, he started closing more. He started making an extra 2,000, 3,000 a month. Plus, we saved him some money on taxes too. That's another place that a lot of business owners also overspend. You should have a really good CPA that's proactive, not a passive one that just sends you the bill. But man, like when we freed up for him, it was like $70,000 a year. It was easier for him to make that 2 or 3 thousand a month. All we had to do was cash out 100,000 of his IRA to free up that money that was just sitting there doing nothing, right? We just got out of prison and put it to use, right? So sometimes it's just you might not realize you have money locked away in prison, but even if you don't have any dollars, maybe you're just as bad as I was. Foster that abundance mindset. Have faith, that things are always working exactly the way they should be. Have gratitude. Foster gratitude daily. I do a power hour morning routine where I do my 3 E's: exercise, education, and enlightenment, right? So I exercise my body, I move it, I educate by growing and learning different things, whether it's in business or in other areas. And then enlightenment is I focus more on like the spiritual aspect. Am I doing, meditation, even like prayer or scriptures and things like that, or journal writing, or whatever it might be. Like doing those kind of things helps me foster abundance mindset from that morning, so that I have a early win, right? Because I'll tell you, when I felt like a loser, I needed every win I could get. And so do
Yeah.
that, start to foster that abundance mindset, and you'll watch that money will start to increase, especially when you focus on the cause, which is how do I serve people, solve problems, and add value, where money is just the byproduct.
Love it. Add value. That's where it goes back to. It always goes back to that. How
Always.
can we serve others adding value? Well, yes. Well, Chris, this has been very good. I appreciate you taking the time to share. I love some of the nuggets you've shared, some of the perspectives. And to our listeners, if you want to chat with Chris, maybe about your situation or just learn more about what he does, you'll see the links below on how to connect with him. So feel free to reach out to him because this is a subject that we can't afford to get wrong, and understand we all make mistakes, but like you said, he came back from over 1 million in debt. If he can do it, you can too. So, Chris, I want to thank you again for the transparency and the nuggets you've shared. So I appreciate that. Can you leave us with a final word?
Yeah, let's say this: there's always hope, right? Just know that there's always hope. You just may not be able to see it yet, but it's there. You just have to. That's why sometimes it just helps when you have somebody else looking at you, and that's why you have a good mentor, have a good friend, somebody there to call you out on your bull, but also somebody else to give you that hope to say, listen, keep going, you've got this.
I love it. Love it. Well, thank you again, Chris, for popping on the show today. That's wonderful words, and I look forward to continuing the conversation.
Same here, Frank. Thank you so much.